Good morning, everyone, and welcome to the Quantum Leap Futures Morning Leap session for Tuesday, November the 27th, 2018. My name is Doug McKay. I'm the founder of Quantum Leap Futures. Each morning we get together in these live go-to sessions to take a look at the market macro to micro, take a look at the structure of the market, and then drill down to our trade levels, our targets, and our hypotheses for the day. We do create multiple hypotheses. We do not know what the market's going to do. Therefore, we create multiple scenarios, then wait for the market to open up, show us who's taking control, and then we execute the plan that best suits the market. And then as the context changes, shift from one plan to the next so that we stay in tune with the market. This is a subscription room. If you're interested in checking it out, send me an email at quantumleapfutures@gmail.com. There's no website. There's no blog. It's not a commercial venture. Everything we do here, we do it live in the go-to, and then we do live trading and analysis during the course of the regular trading hours. Please read through the disclaimer. Nobody at Quantum Leap is a certified trading advisor. We are retail traders operating within a self-organized learning environment. Past performance is not indicative of future results in any trades that you see. Quantum Leap are for education purposes only. Please trade your own due diligence, your own trade plan, and your own risk metrics. Okay, so now taking a look at yesterday. Yesterday, our main hypothesis, Hypo 1, was an open auction out of range, a move down into testing the 49 area, our over underline, and the range high from the Friday holiday session, and then finding buyers and rotating us up into the year open and the half gap at 75 and a quarter for the year open, 76 and a quarter for the half gap fill. And that is basically what we kind of got, although it did look like this move here and the failure at 71 was possibly starting to shift us to Hypo 2, which was an open auction out of range, a move up into the 70 to 75 area, and then rotating down and coming back into yesterday's or Friday's range. They failed to even get to the range high before the buyer stepped in. So it was kind of like an elongated, big opening swing that lasted for hours. It was just really tough to trade, in my personal opinion. Of course, we get a nice foobar Mr. Sneaky at the low, and then we get the rotation up in the target hit to the tick at the half gap fill, and then the sellers come in and they rotate it back down and close just below 70. So kind of interesting day yesterday. Taking a look at the news today. Remember, the big news is going to be Wednesday and Thursday. But we've got Red Book in 4 minutes. We've got House Price Index, and its associates in 8 minutes. And then at 10 o'clock, we've got CB Consumer Confidence. And then 10:30, we've got the Dallas Fed service revenues and Texas services sector outlook. And then 11:30, we have the 4-week and the 8-week bill auction. Then 1 o'clock, we've got the 5-year note auction. 2:30, we've got Chicago Fed Evans speaking, and Bostic speaking, and George speaking. And man, these guys like to speak a lot, especially coming in around the Fed minutes, which will be released on Thursday. So quite a bit of news throughout the day. Of course, headline news coming into the G20 is going to be anything that comes out in terms of China tariffs or Trump. So you really have to pay attention to the headline news, because that's what's been moving this market, and you never know when something's going to be said and then get a huge move based on that new stimuli. So each day I like to start my day with a simple candlestick chart. I start with the monthly, start working my way down. I use a 9 EMA, 20 SMA. I want to see where we are in terms of the trend. Do we have a solid trend, good slope and separation, price paralleling the 9 nicely, or are we challenging the trend by coming and breaking below the 9 or above the 9, depending on which way the trend is, or are we possibly violating the trend with a break of the 9 and the 20. You can see that we had a beautiful upward trend, 14 months of one-time framing up. Then in February, they violated the one-time framing, came down, challenged the trend, but could not break below the 9 EMA, bounced off of it, got the continuation, and then in October, we come down and we break below the 9, and we come down and try to violate the trend, bounce, and then in November so far, we've been above and below the 9 and the 20, and we're just battling it out in this large balance area. But we are seeing some weakness coming in. As we move to the weekly, you can see that we are below the 9 and the 20. We've got slope and separation to the downside. Last 3 weeks, we failed off of the 9 EMA from below, and we're getting the continuation. We do have a little bit of a technical gap. So far this week is an inside week, so we have a possibility of a Mr. Sneaky and a possible technical gap fill by moving back up and testing the 9. But this is a downward trend right now on the weekly. As we move to the daily, you can see that we are still below the 9 and 20. We're getting slope and separation. We failed again overnight to get back above the 9, and we're moving back down towards the lows of the overnight. Going to the intraday, excuse me, my voice, 1 second. Going to the 4-hour, we were in this nice downward trend, and then yesterday they took it back, and so far we've been battling to hold the 9 EMA, which is sitting here at the 2660.50 area, and currently right now we're just trying to get back above it, but having struggles right now. Watch this 2649. That's going to be our key line in the sand below. It's a very important CLVN. We'll look at that in the structure in a minute. If we get below the 49, then I'm looking for the continuation down towards the month low at 2626 and the October low down at 2603. Going to the 30-minute, you can see that we are below the 9 and the 20, coming back up, and again, we're struggling at that 2660, and the 9 EMA is up here at 61.75. If we do get back up here, we have a naked cross up here at 26.65 and a quarter, and that would be your target if we get above the 60. All right, so taking a look at the structure. Excuse me. So going back to even before the beginning of the year, as we moved up and we started this upward trend back in the election of 2016, we get this big move up. Sorry. To 28.89, put a new all-time high in, then fail, come all the way back down to the start of this this trend, find buyers, and we just start rotating and grinding our way up into new all-time highs. We put in the new all-time highs. The actual all-time high is 29.47. Put in the Globex. The all-time high put in the RTH is 46.50. This is an unequalized high. At some point in time, I expect the RTH session to breach that 46.50 and take out the unequalized high at 47. But we try to hold value here. They fail and they break down. We come all the way down and we test the lower level and this past price acceptance in the 2641 area. Find the buyers, rotate us back up into the 2800s. Failed to put in a higher fractal high. We have a lower fractal high, and then they tried to hold value here at 2810. Fail. We come back down into the longer time frame balance, which is this distribution zone, which is between the 2751 and the 2707, and we try to hold value there again, and then we fail and we gap down and we come down into this prior value area and price acceptance down here in the 2654, and since then all we've been doing is chopping around that level. So for 2 days, if I take this profile off, 2 days down here, we tried to get above the 2665 or hold the 2665, I should say. Sellers kept on stepping in. This is your selling tails here. And then we gap down. In 2 days, we balance here. And then they accept this price at 2642 and a quarter. And then we gap up. And now we're back up in this 2-day balance. And if I take a profile and overlay it over the 5 days, the 5-day microcomposite VPOC is at the 2665 area. We're just below that, just below this CLVN here at the 6150. That's going to be our over-under line today. Below it, I'm looking for a move back into the 58 and a takeout of the overnight low, which is currently at 55 and a quarter, and possibly a move back into this gap zone. Okay, we just came up and touched the mid of the gap, this gap zone right here. So if we don't hold the 58, I'm looking for them to rotate back down, and our key line in the sand is 49, and that brings us back into the gap zone of the gap up, and the mid of that gap. I don't have it on my chart yet, so let's just calculate it. So the low right here is 2652.50, and the high right here was 2647.50. Now, some people wouldn't be factoring in these two holiday sessions, but with the range and fact that we traded, I always calculate the gaps, or put the holiday sessions into my trading. And the mid of the gap is 2650, so 1 point above that key CLVN. Levels to pay attention here, obviously 61 and a quarter, 65. If we can get above the 68 and a quarter, I'm going to be using that as my key line in the sand above. Then I'm looking for a move back up into that year open at the 75 and a quarter. If we don't hold the 58 area, look for the low from yesterday at 53 and the overnight low at 55 and a quarter, and then anything below that, I'll move down to test the mid of the gap and a test of the key line in the sand below at 49. And then below 49, the target is going to be 42, and the 2-day balance that we found that got us gapped up here. Likely to see some chop. This is still a pretty blunt area of the profile, so likely to see some chop between this 53 and this 65 area. So there is a possibility that we'll see balancing today. But let's take a look at the overnight session. The overnight session is a B-shaped profile. Pretty good price acceptance here around the overnight VPOC. There's a couple of areas of undetermined fair value. You've got 62, the 50, the 61, and the 58 area. Those are all numbers that we're paying attention to. The overnight inventory is pretty balanced here. We had this nice spike, and this is a beautiful example. I want to point this out. And I missed this trade last night. I went to bed, believe it or not, at 2 o'clock in the morning. I was waiting for this this move here. But here you get the spike with volume, huge volume, and then you get the inside. This pulls you away from the 9 EMA. This is the 9 EMA right here, creates the technical gap. Then we get the opposing force coming in, the Mr. Sneaky, and then we get the return to the gap and close of the gap. And beautiful, beautiful. This is picture perfect FUBAR Mr. Sneaky technical gap. And then we just sort of chop around and we find some balance. So inventory is probably about 50-50 right now, maybe 60-40, but not looking for a lot of balancing overnight. We do have a weak low down here between the low from yesterday's session and the low for overnight. It's kind of blunt down there, so it wouldn't surprise me that we see some extension down and a move down to test that mid and that gap. So moving our numbers over, our key line in the sand is going to be 49. Our over underline is, I'm going to actually use 63. This is going to be a little bit of a wide trade area right here between the 61 and the 63, but I'm going to use 63 as my over underline simply because I want to get back inside of yesterday's value. This is a valid value area, even though it's very blunt with multiple undetermined fair value. But we did have fair amount of rotation back and forth, so there's just no real price acceptance within value, but it is a value nonetheless. So I'm going to bring this to the front and mark it as over under. And then the key line in the sand, I'm going to move down, and that is going to be above the 65. Let me just take a look at this again for a second. Sorry, I was a little late to my desk. 68 and a quarter. Oops, I already have it on my chart. Take this trade zone off. All right, so our overnight high is up at 84 and a quarter. Our overnight low is 55 and a quarter. So our 20 period daily ATR is running at 52.54. So based on the overnight low, our upside daily ATR target, yep, it's up in the 2700s, 2707.75. Remember that the 2707 is a very important level for us. It is a key line in the sand above. It's a very big CLVN. It's also just above our month open at 2706. And then off of the overnight high of 84 and a quarter, our downside daily ATR target is down here at 2631 and just above that naked close and range low down here and just above our month low at 2626. So our overnight low is 55 and a quarter. We could make another overnight low before the open, but right now it's at 55 and a quarter. And we could see a VPOC shift, but right now it's at 62.50. A little bit congested here. All right, so what am I looking for in terms of hypothesis? Well, unfortunately, since it is a wide area of balance we're in, hypo 1 and hypo 2, yet again, going to be equally weighted. But we are finding the buyers right now, and I'm looking for my main hypo as an open auction, in range, in value. I'm sorry, just out of value. I'm looking for a move down into testing the low from the prior day session, take out the overnight low, and somewhere between the 42 and the 49, I'm looking for buyers to step in, rotate us up through the overnight VPOC and continue up and break through the high of the prior day. So I'm looking for a bullish engulfing day and a move back towards this 26.95. I don't think we'll, it's possible we get there today. I don't think we will, but the overall sentiment in hypo 1 is going to be, a move down, find the buyers, and then grind us up through and end up with a bullish engulfing day. That is hypo 1. We have violated the one-time framing down, and so I'm looking for a possibility of a bullishness and a push up into the 2700s again for my longer time frame. That is hypo 1. Hypo 2, again, equally weighted because we are seeing weakness in the overall trend on the larger time frame is starting to show a downward trend on the weekly and the daily. I'm looking for an open auction in range, just out of value, a move up into the overnight VPOC, and somewhere between the 60 area and the 73 area. I'm not looking for the high to get broken. I'm looking for sellers to step in. I'm looking for a rotation down, with the main target being down here at the 2642. Chop in this area, and then get a late day probe down into the 33 area, and then find a base here and start moving up and closing somewhere in the 2640 to 2650 area. That is hypo 2. Hypo 3 is going to be a trend day up, a turnaround Tuesday, a open test drive, failure to take out the overnight low, push up into the 75 area fairly quickly, probably within the IB being set, the initial balance, and then find buyers here and continue the push up and come up into the 2695 to 2696, and then go sideways as we fight the 2700s. That is hypo 3. Hypo 4 is a breakdown day, an open test drive or an open drive down, failure to close the naked VPOC, and then push through down to the 42 chop here, then push down into the 31 area, and then fail and make a new month low and come down towards the October low and the 2600s. That is hypo 4. Those are my hypotheses for ES. Taking a quick look at gold. Sorry about that. We continue to chop in this area. The balance for the last 7 days or 8 days is right here in the 2223. We've been talking about this level a lot. You can see we were chopping it here, and now we went down. We found buyers. They accepted price. They come back up, and now we're chopping here. And basically, gold is tough to trade right now, but the levels you want to pay attention to are going to be holding the 20 area, the 21 to 23 area. Fail to do that, look for them to test the 17s. Any break below the 17s, look for rotation back down into the 1207 or the 1202 area, and back down to the last place we just found buyers. If we can hold the 22, look for them to push up into the 27, and a break above the 27. We're still targeting this 34 area. Didn't quite get there on this move up last week, but again, my main hypothesis for gold is to come back up into this 33, 34 area and continue to find value here for the next leg up towards the 1266. But 17 needs to hold this time. If it doesn't hold, then a move down. And if we don't hold here and hold the 1200s, then the big move next and the level I'm looking for is down here in the 1150 area. So that's what I'm looking at for gold. That's going to complete our pre-market session. As always, trade well, trade safe, and we'll catch you on the flip side.